Good morning, everyone. Thank you for joining us bright and early here. Our topic, of course, is payment trends for 2025. I think arguably this is the most exciting time to be in the payment space. I think UPI is booming. Globally, it's getting the recognition that it deserves. We are connecting with other faster payment systems. CBDC is being launched. Credit cards are booming. I think all-time high for credit cards as well. So let's find out from our panelists what they see as the most happening trends in the payment space over the next 5 years. So opening remarks, Cyril, you want to go first? Initial thoughts on the payment space and how it's panning out.
Hi, first of all, thank you, for making me a part of this panel. I think, I will look at the entire evolution of payments, pre-2016 and post-2016, right? One fine evening and, a decision was taken and we saw a complete, shift the way we were transacting, right? And I remember, and Vishy is here, we all come from, the typical ATM background and ATM industry, and we were talking about why the transaction pricing, prices are not going up. We were setting up ATMs where, to generate more footfalls, to more cash, and suddenly, this industry came down in the last 6-7 years, and the kind of, things that has happened in the payment industries. In fact, not only in India, but the entire world is actually observing India, from an evolution perspective. Now, what it has also done is actually reduce the entire risk and cost associated with the physical cash handling, right? And that's a boon to the economy and to an economy which is booming in this thing. And now with CBDC coming, I think it's going to take India into a completely different level. And with UPI being accepted in international markets, I think it's just more exciting times in the future.
Thanks, Cyril. Vishy, initial thoughts?
Absolutely. So, in fact, there is no better time than now to be in the Indian fintech or banking space. The last few years the changes are too fast and too tremendous. And with that kind of pace of change, not happening not only at a banking level or a technology level, but we see the changes happening at a society level itself, right? COVID never slowed down India. I mean, we were able to quickly adapt to the digital forms of payments. And today, we are able to take a lesson from India and take it to the whole world. Last week, or probably early this week, we had the UPI corridor opening between India and Singapore. The cost of remittances are crashing. Now, there are news articles like UAE India corridor is opening, Mauritius is opening. So everywhere we are going to kind of take the Indian technology stack and we are going to take it to overseas and tell the whole world how to run the business efficiently, cost effectively, and make real-time payments. I mean, this is very, very exciting time to be in.
Great, thanks, Vishy. Sriram, you've seen a lot of the global landscape, right? How do you see this panning out and where is India on that map right now?
I think you're right. This is probably the most exciting time to be in India in the digital space. I remember about 8 years ago, I was working in Shanghai and Hong Kong, and I was amazed by the revolution that, one app called WeChat had brought to China. And I was thinking, what if India was like this? And now I'm happy to say that India has gone far ahead of that. And while China has kind of been held back by some of the regulatory things and some issues there, I think the way in which India has developed over especially the last 3-4 years, and the way I see this going in the future in terms of the stack that is already in place and the ambitious plans on top of that, and the combination of governmental support, the regulatory framework, the banking industry coming together, and most importantly, the hundreds of young entrepreneurs that I see everywhere starting up in the fintech space and building innovative products is making this even more and more exciting. So I'm really thrilled. Thank you.
Great. Tejas,
Hi,
you've
Geetika.
seen multiple sides of the spectrum. How do you see this evolving?
I don't even know whether today's... Hi, good morning, everyone, and thank you for having me here. Sapphire Connect, Geetika, my fellow colleagues, Rishi, hi. I don't even know how many of the current generation remember writing a check. If you guys know how to write a check. When was the last time you guys wrote a check? It's very exciting to speak about how payments have evolved. 803 crore transactions of UPI. We can't even fathom, right, the ferocity of it. But from the time when checks were there, next evolution came was something called as NEFT. Everyone was so excited. Then came RTGS, then came IMPS, and so on and so forth. It's just that the pace of development in India, and thanks to our population, and because of the proliferation of mobile and the infrastructure, we are basically catching our own tail. There is no parallel right now. If people are even thinking about it, there is no parallel in the world right now as to where payments are. India is far, far, far ahead. Let there be no doubt about it, right? And it will only grow better, and it will only grow upwards. The scale and the ferocity is going to make payment space commoditized. And that's also a challenge and an opportunity likewise. So, right, Geetika, as you very rightly said, right? ATM space, the per transaction cost from ATM, it moved on to phone banking. From there, it moved on to net banking. I don't even know how many of you now use net banking. Forget about writing checks, right? So this is where we have become. And obviously, in the course of our careers, where I think in 2001, a per transaction cost of ATM was about 15 rupees, 16 rupees, as compared to, right, Cyril. As compared to internet banking or desktop banking, as you like to call it. There was not even a mobile app of 8 rupees, and still there was no adaptability. But once I think it reaches a critical mass, which I think it reached in 2010, it just took off. So I think many more things to come, Geetika, as we go along.
Thanks, Tejas. Great. So let's kick off with some questions then. So I think when you talk of India, innovation has been at the forefront. I think the global stage is recognizing India as the innovation hub for payments, right? But of course, there is a side to it which is the bottom of the pyramid. Have we innovated enough to bring that population in the fold, Tejas? And you're seeing a lot of that now, right?
I would like to think so, yes, Geetika. If you look at what is the bottom of the pyramid, as we like to call it, right? It's basically sociologically where the people receive the payments which they are supposed to. And by bottom of the pyramid, I don't mean the people, let's say, who are our staff, the people who work with us. I'm talking about the people who are your Manrega folks, right? Who actually expect a payment and receive a payment, not really having to go to all the institutions asking for payments. So yes, if you look at a simple fruit vendor, vegetable vendor, your workers, they are more comfortable of receiving payments on their phone. And why is that? Because of the trust that is, evolved. I mean, from whichever angle you look at it, the government framework, the RBI framework in terms of the India stack is nothing short of, a miracle, and in the way it has been executed. I don't think there has been enough case studies on that as to how, because of Aadhaar linkage, forget about PAN linkage, but your Aadhaar mobile and your bank account, the money is actually going to where it is supposed to be. People like us are so comfortable now, transferring 100 rupees to, let's say, our staff. That's not the point. By bottom of the pyramid, you're actually going it to the person who's sowing the seeds, whether it's a farmer. 27 Feb is the next, let's say the PM Kisan money will be reaching. It's not even an event anymore, right? People are expecting that money. So because of the QR code, which is altogether a bigger revolution than a UPI, obviously is part of the UPI stack, the money is going to the bottom of the pyramid. People are, and more importantly, as a payment, it is commoditized and very predictable. And I think that is very important because the moment it becomes predictable, it evolves a lot of trust, it invokes a lot of trust. the money doesn't change hands. That 1 rupee which is supposed to go to the bottom of the pyramid actually goes there. And I think that is where, payments, and especially in India, because of the India stack, has played a huge role where money is actually going. Obviously, you will have issues, but if 99% of the money is actually going where it is intended to be, and folks are comfortable receiving, they themselves don't go to the banks actually. They actually go to the merchant points in order to withdraw cash, or let's say do a domestic money transfer or other enabled payment system. I mean, what else do you require, right? Look at the amount of wastage that has been taken out of the system, and the money which is actually going where it is supposed to be. So yes, Geetika, is there scope for improvement? Of course there is scope for improvement. But over the past 6 to 7 years, bottom of the pyramid is actually on par with the mid-segment in terms of comfort of receiving digital payments. And I think that's a big evolution.
I agree. I think if we are there and the trust that has been built into the ecosystem, that is, I think,
absolutely
a big achievement. So, Vishy, moving to you in terms of CBDC and the latest innovation, right? What do you think is the incremental impact now of retail innovations, right? We've seen the big impact of UPI. Now, how do you see the incremental impact of these kind of retail innovations which are happening? Of course, there's a wholesale angle to it, but right now, the talk of town is the retail CBDC.
Absolutely. Very interesting question, Geetika. First of all, we need to understand why CBDC came about, central bank digital currency. Today, India has got about 32.4 lakh crore currency notes in circulation. Right? It has gone multifold by the time Demon was announced. Right? Today, the cost of managing the life cycle of a currency, say roughly a 100 rupee note, has a life cycle of life stage of about 4 years. The cost of managing it is somewhere around 15 to 17%. This data is there in the press, so I'm not creating anything new, right? So per annum cost at 4% or 4.2%, right? Multiplied by 32.4 lakh crore. That's a very, very sizable sum, about 1.2 lakh crore, right? That's a huge sum of money. That is much higher than the cost of the union budget allocation for healthcare, which is somewhere around 90,000 crore rupees. So cash, as we see around, it is actually creating a huge amount of cost for the whole ecosystem. Now let's look at the digital ecosystem. Say, for example, an UPI P2P. Running an UPI stack across the country, across the ecosystem, it comes around a cost of about 8,400 crores, right? Which is about 0.25% of the value of the money. So where is 8,400 crores and where is lakh and 20,000 crores? 1.2 lakh, lakh and 20,000 crores. So there is a factor of about 15x. That's the kind of money the government is going to save. That is the amount of money the public is going to save by moving to a digital transaction. Of course, it cannot be like we can move the entire sum of money from cash to digital in one shot. It is going to take time. But we are now talking this conclave with a focus of 2025. So sooner or later it is going to happen. Like how people adapted to UPI. I was there in PCI at the time when the UPI got launched in 2016 to where it is now, 8 years, it's phenomenal growth. Right? So CBDC definitely also has got a equal opportunity as far as market is concerned, because it is also solving the same problem of what is created by cash. So by moving to a cashless economy or a less cash economy, we are going to kind of create a lot of savings for the public of India, and the way Indian public has adopted UPI, I'm sure e-rupee, the time is coming. So this is the perspective from the retail e-rupee side, right? Over a period of time, like how people have adapted to UPI, taking their phone out, scanning a QR, sooner or later people will do the same thing for e-rupee as well. So I'm sure UPI has paved the way for an Indian public to use a CBDC currency. So there is a lot of work which has been saved by the government to try to promote, educate the public about e-rupee. It is just there. Now the government has to find out how e-rupee can be a better use case compared to an UPI And that is a problem. I'm sure the Reserve Bank and the government can together solve it. And definitely, like the way we have seen the success of UPI, e-rupee is also the central bank digital coin will also find wider acceptance among the public, and it's a matter of time. We are here. We are fortunate enough to wait and see and make things happen to make the process smoother and sooner as well. Thank you.
Thanks, Vishi. I think let's move to some buzzwords now. BNPL, the big buzzword that we were hearing quite a bit. But also now there is UPI linked to credit cards. There's talk of credit on UPI, right? Is that the future that you see, the intersection of payments and lending?
Thank you. I think the intersection of payments and lending is a very, very fascinating field, where I am particularly excited about a few other capabilities which are coming up, which are built on top of the same India stack. I mean, I'd like to talk about two. One is the Open Credit Enablement Network, or OCEN, which is now taking off. I think quite a few banks have now launched this, and a few more are in the process of getting in, and I think within a few years. So what OCEN is going to do is it's going to do to lending what UPI did to payments. And in a nutshell, for people who don't know enough about, who haven't heard of this, think of it as an app where me as a person who wants credit can go in there, and I just, depending on my use case, I can just go and request for X amount, and I would have various lenders all providing me with credit at various rates. I can pick and choose whoever I want, and within a few minutes, literally, the disbursement has happened. This is already live now in a pilot manner with the government electronic marketplace, and we are seeing considerable traction here, and this is only going to grow. The other thing that I'm particularly excited about, especially from a small finance bank point of view, is around the ONDC, or Open Network for Digital Commerce, which is now going to completely democratize. It's also going to put in the whole world of e-commerce in a bit of flux, but I think overall it's going to then emerge as a huge game changer in the whole Indian e-commerce space, and it is especially going to bring more of the masses into the whole e-commerce arena. Now the combination of these two is going to now take us to the next level. So as my colleagues were mentioning, how there's going to be explosion in this. So these will then serve as further, again, building blocks for more capabilities which will be built on top of these. And this is just I would say, tip of the iceberg as I see it. But these are two active areas where we are participating, and we're trying to bring benefits to our customers.
Just to add to what Sriram is saying, I personally feel ONDC is the UPI 2 years from now, because it will bring your buyers and sellers on one platform. Importantly, like UPI, it will bring transparency. And that's my personal belief, which is obviously translating into how we are at our corporate, is building the entire ONDC framework.
Thanks, Tejas. Thanks, Sriram. Cyril, moving to digital, right? You've seen multiple years of evolution on the digital front, right? Are banks keeping pace with fintechs on that front?
I have a slightly different perspective with respect to banks keeping pace with fintechs, because banks will have and continue to have their own limitations, while fintech will not. But the way I see it is that rather than keeping pace, I think banks are now leveraging on the strengths of fintechs, and I am seeing more and more collaborations happening, which brings everyone into a win-win situation. We all know that fintechs, from a technology stack perspective, they are slightly advanced than what banks normally used to invest. Banks also are, governed by the regulation, so there is a lot of risk and compliance angle which the banks have to follow. But having said that in mind, if we have a right use case, and especially in IndusInd, and I love giving this example, I have tied up with at least 4 or 5 players where using the same India stack, exposing my platform APIs, I onboard customers using their platforms, right? And I see a huge, uptake every month on month, the growth. So it's time to leverage onto each other's strengths and create a business model. And this business model is much more sustainable because, at the end of the day, both of us are trying to acquire that last mile customer, right? So why don't you do it together? That's how I see it.
Thanks, Cyril. And I think you've just set the stage for our next discussion, which is around the regulations, just changing the gears a little bit. So, Vishy, just building on Cyril's point, right? Collaboration was a big thing a few years back, right? We saw a lot of banks collaborating with fintechs on cards, lending overall. How do you think we are poised right now on that whole collaboration spectrum with new guidelines coming in, etc.?
Why did banks have to collaborate with fintech? Because the fintech players brought in a lot of value which the banks didn't have at that point of time, say 2016, 17 or 18 time frames, like speed of development, agility, technology innovations, manpower, the mindset to create product for keeping the customer in the middle. These things were not as much as, these things were not present with the banks as much as a fintech had. Now the banks definitely looked at fintech. Fintech brought in all these flavors into that. And from the fintech point of view, banks had a huge bunch of customers sitting with them. Loyalty, trust factor, which is one of the most difficult things to acquire. I mean, I talk about it like I see it myself today, a 101-year-old bank with a lot of trust from our customers. This is something which is very hard earned. This is something which a fintech cannot outright go and take it from the market or from the consumer. So when these two people got together, right, either they can do three things. One is compete, or they can collaborate. The third is they can co-create, right? So compete is definitely some of the players who had the deep pockets, investors' money. They were able to kind of go create a large market, which happened, right? The second major area of interest is where the collaboration happened. Like Cyril had explained how IndusInd Bank is able to take ahead of a product from fintech, and they were able to reap the benefits of creating a great customer experience for the customers. So this is where banks are focusing in. Today, when we look at a fintech collaboration with the bank, it used to be a news item like somewhere around 2018-19. This bank tied up with so-and-so fintech. And today it has become the norm. It is normal. It's not catching attention of any news media agency anywhere. I mean, it's just a BAU as we speak now. Having said that, both the parties, banks as well as fintechs together, they have created product which created a synergy, which if the players had operated on their own would not have achieved the kind of scale, kind of service, kind of delivery efficiency which bank and fintech together were able to achieve. So the collaboration part is where the strength lies in, and the banks, whoever is opening up their infrastructure or opening up their customer base for a fintech product, I think that's where the success story lies in. Today it's a consumer who's going to dictate and demand, okay, this is the kind of services I am expecting it. If it comes from a bank, well and good. If it comes from a bank and a fintech, it's even better. So that's where we are in now. The collaboration is becoming stronger, and as the funding in winter comes across, so a lot of fintechs who were taking shots at an opportunity, today they are all focused in taking the most winnable opportunity, convert that into a business proposition, take a bank along. So they put a tick mark against all the boxes which are required to achieve success. They are doing it now. I think things are getting better now. Thank you.
Thanks so much, Vishi. Tejas, I think we have a very active regulator, right? Also a very innovative regulator, right? But fintechs seem to be regulating at a pace which is faster than most countries. Are the regulations keeping pace?
I would like to think so, yes. In fact, our regulators is among, the very best across internationally in terms of keeping pace as to what is good for the customer. And importantly, at a consumer level, the most important factor is the trust, as I keep on saying in all my forums. The trust that your money is safe, any transactions that you'll do, there is some amount of issue handling and issue resolving capacity and capability. And third is the fact that how is technology enabling it and not making it complex. So yes, our regulators are active. They are keeping pace, at the same time ensuring all the bells and whistles or all the Lakshman Rekha, as I would like to call it, are also being there. It's very easy for us to get drowned into the noise of a lot of fintechs. At the end of the day, and this is my experience after meeting a lot of fintechs, is they will be more than happy to be, let's say, at some point of time being regulated. It's not only about what do I do after making a wonderful, good-looking customer journey, let's say, especially which leads to a lending app, for example. But when the noise comes, when there are complaints come, it is a regulator which actually comes into the picture. So, banks, as Cyril was saying, banks have to have the compulsion of all the regulations. At the same time, also it needs to keep pace. So our regulators are in touch. There is always an active dialogue going between a fintech, between a bank and the regulations. What is good is getting adopted. What is, let's say, a borderline takes time. And I think that is how it should be, because at the end of the day, it's not only about your reward points, your fancy user journeys. At the end of the day, it's the customer's money online, whether it is from a deposit point of view or from a lending point of view, and how much is that trust which is going. We all need to see all the headlines which are being made, especially related to a lot of lending apps which are not regulated, and the downward social issues it causes, right? I mean, that has led to a lot of noise, a lot of regulation, and for rightful measures. So yes, I think our regulators are in pace. They let something which comes, let it bubble, let it scale, understand, take all the, if I'm using the right word, all the viewpoints from all the participants, and then they take the next. So I think it's a completely democratic process, and I'm absolutely comfortable with the way it is being run. Banks are being regulated by banks and not by PE funds. We should remember that.
So, Cyril, your thoughts on essentially, the entire profitability conundrum, right? Unit economics are always in pressure, right? So how does it work in the long run, right? Volumes are increasing, unit economics are not matching. How does it work for a payments business, for a bank or a fintech?
See, I think, the fact remains that payments are now no longer being looked at as a profit mechanism, right? It's more like an essentials which has to, it's like a hygiene factor, right? And I think we were anticipating this post 2016, but yeah, it has now become a very, very integral part of everyone's ecosystem. And that's where I think, the focus has shifted from measuring profitability into payment space, rather than looking at the profitability at what are you engaging with in the entire ecosystem of that particular customer. So if my payment stack is good, what about my other products which I'm giving as an offering by taking the hit on the payments cost? But what I'm helping him to acquire, give him what is the other value-added services that I'm able to give, and that's where I make money. Is my onboarding journey very good? So if I'm opening up an app, just an example, I have a very good payment stack, but I also want him to get engaged with me in my other financial products, say a line of credit or a savings account. How comfortable is my onboarding journey, and how user-friendly is my journey where he's opening an account with me? And then how continuously I'm engaging with him, what is the value that I'm giving into him. I think payment is just a part of his ecosystem. But if as an institution or as a bank, I'm able to touch the entire ecosystem of the customer, I think that's where I'll make money. On a standalone basis, I mentioned at the start of my, discussion that we were looking at, the transaction cost of ATMs. Now it has come down. Then we were looking at the POS pricings. That has gone away. And now with UPI, literally, it's a zero game affair, right? So so there is no way that you will be, and now with UPI linked to credit card, look at what is happening. I think the whole credit card business is also going to go for a toss, right? So payment has now become a hygiene. So you cannot make money out of the payment, but using payments, how are you ring fencing your other products and make money out of it? I think that's the way ahead to it.
See, the way we are looking, we are looking at trying to make unit economics out of payments, right? It is working at the moment. For example, in ATM industry, we can always figure out if you are able to deploy an ATM in the right place, get the right hits, the ATM becomes standalone profitable. However, there are payment railroads which are being introduced like UPI, very difficult to kind of profit out of UPI. At the same time, we also need to understand RBI Payment Vision 2025. It talks about the government is going to push hard, reducing the cost of payments so that the amount of digitization of payments that is going to scale up. So, as banks, are we thinking in the lines of, am I really working towards capitalizing the exponential volume that is going to happen? Is my infrastructure, how am I going to game it up? Is it going to be, am I going to come back, think on the same legacy terms in terms of monolith architectures? Or am I going to go maybe adopt cloud or looking at micro payments? Is that how I'm going to make money out of it? Second option is the bank. For a bank, payment is an enabler. It is not an out-and-out profit-making channel or an opportunity for a bank to do it out of payments. We have to look at the surround systems. If I'm able to make the payments invisible, which means make it so smooth, so friction-free, then the customers are going to prefer it. Is my UI better, like how Cyril has mentioned? Is my product likable by the customer? Am I keeping the customer in mind while creating a product? Right? All these factors will weave around and try to give a holistic experience to the customer, which is what is going to bring in money into the bank. So if I look at payment in isolation, probably it may work for maybe, my guess is maybe this year or the next year. But going forward, things are going to get, payment is going to be extremely difficult to make money out of.
Can I just add to that? Sorry.
Do you anyway?
Yeah, so actually I wanted to just extend.
Clearly, this has got the panelists rolling. Go ahead.
I was trying to think of an analogy. So I look at the railway system. So the payments, I would say the analogy is to the railway line itself. So unless the tracks are smooth and the signals are working and all that is okay, the train can't run. But you can't make money on the track. You can make money only on the train. So today the issue is that the banks are laying the rails and they're putting the tracks and they're making the signals and making sure the tracks are safe. But the trains which are running are by others, partially also the banks. But so the whole question is how do we make this equitable between the person laying the rails and the person running the train, and also how do we kind of get into the entire ecosystem here.
Tejas, you have a view? You've been running a successful payments business for a while.
That's because I think, first of all, let's not look at payments as a cost. I would look at payments as an investment. I think a simple exercise, will probably give you the empirical evidence, if I may use that word. Look at customers who are not active with your institution with respect to customers who are active with your institution. And what are the type of transactions they do? 8 out of 10 transactions would be either UPI or, let's say, an IMPS here. So a payment railroad is very important in order to make the customer be with your bank, be active with the bank. That's how he keeps your balance. If there is no balance, what will you cross-sell? As simple as that. So I think the rule of thumb, simple 101 is, don't look at payments as a cost. It's an investment in order to keep the customer engaged with your bank. And that's when your ABC, your acquisition, balance build-up and cross-sell will follow. So I think we kept that, and probably that has helped us make payments a profitable business, Geetika.
I think, in fact, counterintuitively, I was speaking to a lending startup right now, and they were profitable, but they realized that their engagement with the customer wasn't as often, right? So they had to launch a payments business to be able to, engage regularly with the customer and then offer a whole set of offerings, right? But yeah, so Sriram, I think that's the trend that we are seeing, right? A single standalone business, either payments, lending, doesn't seem to be, what fintechs or banks are operating at, right? Is there a need to diversify for fintechs as well as banks in the long run and offer more to the customer?
Yeah, absolutely. So, the way I look at it is, again, I'll come back to my earlier analogy of the payments ecosystem. I'm sure nobody's ever gone and bought a payment. Payment is just something you have to do in order to get something else, right? So it's like, I never went and bought a track ticket. I bought a railway ticket because I wanted to go from Delhi to Bombay or something like that, right? So similarly, it's the same situation. So having said that, what is it that we as banks need to do, or how do we now grow the business? We'll need to come up with innovative customer experiences. And the beauty of the situation we have in the country right now is that the infrastructure is there. The mass adoption has already happened. So we can identify problems in any segment. We can come up with solutions which are digital solutions or coupled with digital plus physical solutions to whatever that segment's issues are, and build on top of this infrastructure to provide that solution. And given the scale of the population and the economy in India, we can scale it up very rapidly through digital. And again, it doesn't, the other part that is enabling all this is the whole fintech ecosystem. You will be able to find 2 or 3 fintech partners and then you can create a experience by linking them all together through APIs and also with a combination of our own staff plus business partners and so on. And we'll be able to build experiences, scale those experiences, and then drive those to profitability. That, I think, is the way in which we'll be able to exploit these rails and infrastructure.
Perfect. Thanks, everyone. I think we've had a pretty exciting discussion. I think to wrap it up, let's take a poll. We've spoken about CBDC, we've spoken about OKN, we spoke about UPI going global. We spoke about ring fencing the customer with more, right? Cyril, starting with you, what's the trend to watch out for in the near future, according to you? What's going to be the game changer?
I think there is not going to be one single thing that can be picked up as a game changer. I think the way things are happening in this country, in next 6 to 8 months, you will find many initiatives coming. I was reading the article about RBI wanted to set up the new banks. I'm more excited to look at it. I think it has slightly taken a slow pace, but I think that is something that, if you ask me personally, I would like to know, because what I have been hearing and what I have been reading is that the regulation is expecting something very, very exciting coming out of the banks, right? And not doing the same things which everyone has been doing. So that's one thing. CBDC, of course, but I'm more interested to see, the adoption of digital currency at the deepest parts of India. I think that's going to be the game changer. This year we saw a lot of initiatives that was taken. We started off with the DBUs that happened. There was a lot of noise around that, and then I was expecting that this will take off at least another 500,000. So I think while there is a lot of, noise happening in the market. I think it is more important that how you continue to grow, how you scale it up, and how you also increase the adoption. But, the 3 or 4 things I think in the next few months are, very exciting to watch. Otherwise, who knows, some new innovation might also come in next 6 months.
Great. Vishy, your thoughts? Where are you putting your money?
Okay, there are few areas where I believe things are going to change dramatically. One is offline payments, right? Could be UPI. One of its avatars is going to come out with an UPI Lite with a small wallet inbuilt into the UPI. Common library, it's going to enable it. Similarly, I can see the CBDC also coming out with some use cases for offline payments. So with that, with one swipe, we are removing the network dependency or network availability or even the availability of devices to kind of ensure there is a payment which has to happen. That is one part. Offline payments is one thing. Second area where I see the changes which are going to look forward to is the mechanisms or the methods in which we are going to eliminate the transaction disputes. Fundamentally, today we have a transaction success, a transaction failure, and there is a transaction timeout. The timeout is, even though it is kind of contained, managed, watched very closely, considering the volumes of transactions we are doing, the timeouts are significantly higher. From a user point of view, a customer goes, makes a payment, the merchant has not received the payment, and the merchant says, I will not release the goods until I see payment in my account. Right? So that creates a friction, probably loss of trust. So as we look forward to, by 2025, we should try and see that how we are able to minimize the transaction timeouts or disputed transactions coming out of it. So it should be a final state, either success or failure, nothing in between. So these two aspects we are looking at. Third one is that use of devices for enabling payments. I think sooner or later we are going to move towards small ticket size payments driven by IoTs, right? Payments authenticated. Now that we are talking about UPI Lite, offline kind of payments, tomorrow the regulation may also support payments made by devices between devices, right? Like FASTag is kind of going to go sometime sooner, and we are going to be billed based on the number of kilometers traveled on the road, and that is going to happen. Micropayments is another area, like small ticket size payments, friction-free, invisible payments, small ticket size, where we don't have to really worry about authenticating the customer. So long as we know that the ticket size is small, the customer is willing to take the kind of risk, absorb the risk, and merchant is also okay with that. I don't think we should have to try to build an elaborate infrastructure for processing a micropayment. This can move faster with the least of the cost to the entire ecosystem. There are more to come, but I'll leave it for others to add it.
Thanks, Vishy. Sriram, where are your thoughts?
Right. So I think my colleagues already covered this in considerable depth, but extending on the theme of one is reliability. So all your timeouts and things like that, I see these as threats. And we are, I think we all need to put 100% of effort to make sure that the reliability of our payment rails are at 100%. We aim for 99.99 or something like that, but the number of nines needs to grow. That's number one. I think the other two areas which are very, very critical are around, I'm calling these the threats, are around fraud and, customers getting duped by scams and things like that. So how do we go and get smarter and smarter at fraud detection and fraud prevention? These are again systemic threats. And of course, cyber security. And how do we make sure that the entire system is resilient? So I'm sure the regulators are looking at this at great depth, but it's also very important from individual players' point of view to make sure that we have very high levels of security and strength around the entire stack here, especially around the payment rails, especially as this becomes more and more critical. This becomes a huge vector of or a threat surface.
Thanks, Srinivasan.
It's very, very difficult to crystal gaze, but I was reading one of the reports from PwC about, what the future holds for the next couple of years at least, at a short-term tactical. And I tend to agree to a lot of things. For example, the account aggregation, which is currently not moving at a pace which is supposed to, because let's say of the institutions holding back customer data and getting scared that, what if the customer gets lost? That's one probably. I see with RBI issuing a lot of licenses now for payment aggregators, I expect that space to be very buzzing. More and more innovative solutions which will come for the e-tailers and at the merchant points for retail and MSMEs. Contactless payments, I see the NFC becoming more and more ubiquitous with higher security. CBDC, which is already covered, we already covered. And obviously, more and more UPI. So I'm saying this year will also be a year of a lot of consolidation. You will see a lot of collaboration between fintechs and banks as well in order to ensure that there is some amount of customer comfort level with that being. Having said that, payments will continue to grow at least at 20-25% CAGR over the next 3 to 4 years, because Indians are extremely comfortable and very fast in adoption the moment they have a trust in a system. After that, it's basically a commoditized way of doing a transaction.
Perfect. Thank you. Thank you so much, everyone. Thank you, everyone, for listening in. I think we've had a very exciting discussion, spoke about a host of topics, but I think the key takeaway should be security is going to be utmost important. Innovating for bottom of the pyramid, offline payments. At one end, I think digital experience at the other end, and of course, all at the back of security is going to be the winner in the long term. Thank you, everyone. Looking forward to the other discussions. Thank you.